What's up, G? So we are back. Let's start pretty much reviewing what we have this week for XAUUSD and overall markets because, well, you can see we have a lot of red news. We started today, so we already have two big red folders released. We have positive and negative versus the forecast and the previous. So this is mainly information that will be relevant for the Fed and the decision of the fund rates that we have on Wednesday. That's pretty much the hottest day of the week. Even though we also have final GDP and unemployment claims the next day, and core retail sales and retail sales one day also tomorrow. So this is very relevant because let's go first with the definition of what are interest rates, okay? So you can check it real quick. And then let's go with the definition that Forex Factory gives us. So this measures the interest rate at which depository institutions lend balances. So pretty much you can see the rest of it, and you can cancel here, or you can watch it by clicking the folder. But let's real quick, let's go to the charts because I want to show you something. So here in the gold chart or the XAUUSD chart, as you can see, I have mainly two cycles in blue because overall I want to see all of you to see something. This is the monthly. So as you can see, it's natural that gold will always have more value, or it will be much more appreciated for investors and holders than the dollar. But also we have here this red period. As you can see, this is after the house debt crisis and the USA debt crisis that finally ended in 2011 when they announced that the finance were good and they had no debt issues. They will be able to pay it. So trust goes back to yielding assets. In this case, the dollar, it's a yielding asset. It's not that it appreciates like gold. Gold needs appreciation, so your investment generates a return. With dollar, you can get yields. So, for example, when rates are at 0%, we can see this in the red period. Not gold or dollar have the power in the market. They're both stable assets. One backed by the strongest economy in the history of humanity, and the other is a real asset we cannot artificially create or anything, and it has a limited amount we can take out of the earth and we can circulate pretty much. So, and it's also used in different sectors, so not only jewelry or luxury that naturally will it's a trading. At the end they want cheap prices to sell high, so this is what drives pretty much the XAUUSD market, one of the most liquid markets in history. So as you can see, the difference between periods where rates are rising, like right now, gold will be more valuable than the dollar. So naturally you can expect, as here we have some articles of the Feds, that the game plan of interest rate, its cuts keep shifting because sorry, let me show you something real quick. Since 2020, since the COVID situation, let's go back in time. Naturally, they are forced to start raising the rates. This is not the same scenario as 2011, even though visually and the market is reacting the same. Well, we know that the circumstances within a pandemic and a house crisis is different. This cannot be prevented at all. It's something that will just hit you, and you need to. What the Fed did, they were reacting at how the economy was also reacting to the pandemic. So they didn't know how long it could take before any type of vaccine or solution was there. So they needed to raise in this case, the rates. They capped at 5.5% in 2023. And it's very funny because it was supposed, or at least they announced that the first cut will be during, we just changed to the last 2 years. So I want to show you, they said that at the beginning of 2024, it will start or at least in Q3, they will start the first cuts. And as you can see, we had to wait until September to get the first cut, that it was a very big one. It was 0.5% basis points from the forecast that was, majority had it at 25% basic, 0.25. And as you can see, these weeks after we had also one in November. I don't know how to use this, honestly. Here you can see we had another, this was from 0.25% basis points, and they're forecasting another 0.25%. So I was reading some articles. Of course, you need the subscription here to finish, but pretty much I'm reading how everyone always wants to tell what the Fed is gonna do, or they give their opinion instead of waiting for the reaction, right? So it's very natural. If, as you can see here, the current panorama for XAUUSD is after a big trend in whole 2024 that we were breaking all-time highs. Well, now we're just in a cooling phase. We cannot tell yet this is a bearish, the start of a bearish cycle, even though this is the monthly, and you can see monthly, weekly, and daily we have huge weeks forming dojis, pretty much big indecision in the markets. This is very much forced because of the elections. Trump is someone that might push the economy in favor of, in this case, USA, because as we can see, the Democrats were pushing a very big agenda globally. So it feels like Trump wants to first recover the country internally before helping others outside, and it seems they're gonna take heavy measures for that, like in Mexico and Canada, and it's also triggering some big comments from Trump in other economies, like in global conflicts. So that's another story, but the markets really are reacting to some kind of threat. As you can see, after the elections, the gold price fell off after the announce, and the rates also pushed this depreciation of gold price, basically. And right now it seems like contracts or big investors are closing positions to wait for the next move of especially of the Federal Reserve, because it's the next hot topic that's mentioned. So if we see at least we need them to keep, it's gonna be very, very unusual if the Fed really rises up again the rates after being lower in 2 times. So you can expect the 4.5% very easily, and markets will of course take back this, at least this low in 25.36, where there's a lot of liquidity. I would love to see this area. This is something more, in my opinion, more viable, because this area has a lot of liquidity or traders trapped. As you can see, it's an area after breaking multiple highs that pretty much slowed the momentum before pushing again. And it makes sense a lot, because usually April to the end of the summer shows a slowness in the volatility or in the liquidity or the candles you see, because price was not pushing until pretty much summer break ended. So we can assume either investors are afraid to invest in these prices. It's a very high price for gold, but also not lowering the the rates make this push possible, especially this one. So we have September here. This push especially was triggered by the we won't see any recovery in the USA economy at this point, and conflicts were only raising in other zones that they were very involved also. So until we got the first cut, we had some kind of recoveries here and here, until because also the elections were a very hot topic and main key of interest for mainly big investors, because we don't know it, but they have deals or they will be benefited more from one side than the other. So they wait to put money in either the USA or gold, in this case gold contracts or futures. They usually don't tend to hold the physical asset unless they're big countries or central banks. So that's the play. Like, just wait for this day. Whatever the decision is, most likely will dump gold a little bit more. Then you can wait for the final GDP and unemployment, because this will give pretty much the hint on how the cuts are doing in the economy, especially the last month's cuts of 0.25%, combined with all the other data we have. Flash came positive, and it's negative. It's a big difference, especially compared to the previous. But at least this is positive, and we have at least two other key indicators before and after the news release of the funds rate. So you can expect action in the next 3 days, and also you can expect money opportunities. So don't be afraid, and just take positions based in the data. That's the best thing you can do, and that will be